Hello, friend. In this video, I'll walk you through two ways to record a loan and a fixed asset in QuickBooks Online. We'll also cover how to record loan payments, split principal and interest, and reconcile the loan. So check out the timestamps below if you'd like to jump ahead. In our first example, a business is purchasing a 2026 Dodge Ram truck for hauling. The truck is a fixed asset. They paid $15,000 in cash and financed the remaining $40,000. So when setting up a loan used to purchase an asset, it's important to record both the loan and the asset correctly in QuickBooks. So all right, let's go to QuickBooks Online. Add a new loan account in your chart of accounts. Go to the gear icon and hover over Chart of Accounts and click on it. Click on New Account. Give the loan a clear name like Loan 2026 Dodge Ram Truck and the last four digits of the account. Or you can include the monthly payment like $783.33, whatever helps you recognize it quickly. Set it up as a long-term liability. That just means you're paying it off over more than a year. If it were under a year, that would be other current liability. For the detail type, we can leave it as notes payable. And this part is very important. Do not enter an opening balance or unpaid balance. I'm serious. Leave it blank. Nothing good happens when you put a number there. Nothing. Click Save. Now we're going to set up the asset. I like to keep the naming consistent with the loan, so I'll call it 2026 Dodge Ram Truck. Set the account type to fixed assets. And then choose the appropriate detail type. Vehicles. Hit Save. Now let's take a quick look at the chart of accounts. You should see both accounts there. Your fixed asset, the Dodge Ram truck, right there, and your liability, the loan. This is exactly what we want before we move on. Now that we have those two accounts set up, let's record everything with a journal entry. We're going to capture three things: the asset, the loan, the financed portion, and the down payment. So go to the plus create button and let's create a journal entry. Date the journal entry the day you purchased the truck. Start with the asset. Select 2026 Dodge Ram and enter the full value. In this case, $55,000. Always record the asset at its total cost. That can include things like sales tax, delivery, and other costs tied to the purchase. For the description, you can write to record purchase of 2026 Dodge truck. And for the name, use the vendor. Let's say Dodge dealership. Let's create that vendor on the fly. Hit Save. Next, record the loan. Select your loan account and enter $40,000. For the name, use whoever financed it. If it was through the dealership, use them. If it was a separate lender, like Colorado Financing, use that instead. We'll need to add that too. Now, for the down payment, select the business bank account and enter $15,000. If the business paid for it, use the business checking account. If it came from personal funds, you could use an owner contribution or shareholder contribution account. But for this example, we'll stick with a business checking account. And again, the vendor here would be who you paid, the Dodge dealership. One last tip. I always like to attach supporting documents right here. That could be the purchase agreement, loan documents, or the amortization schedule. It makes things so much easier later on. Now that you see everything is balanced, both show $55,000, we can hit Save. Let's check the chart of accounts. You should see your fixed asset right here and your long-term liability sitting there nicely. By the way, if we haven't met yet, I'm Catherine Silverio, owner of Silver Bullet Bookkeeping. If you're a business owner and you need help with your books, call, text, or email me and let's schedule a free discovery call. Now, let's buy another asset. And for those of you who hate journal entries, we're going to record this using an expense, just to show you another way to do it in QuickBooks. Just like before, we'll set up the loan account. I like to name the loan something like Loan Ford Fusion $771.10. That way, when you see $771.10 in the bank feed, you immediately know what it's for. And hit save. We'll call this asset simply Ford Fusion. In this example, the vehicle costs $31,000 total. We paid $6,000 from checking and financed the remaining $25,000. Now let's record this. Go to Plus Create, click on Expense. For the payee, use the dealership. Let's add Ford dealership. Select your checking account if that's where your down payment came from. Enter the purchase date. Our document says February 3rd, 2026. And under Category, enter the asset, Ford Fusion. Enter the full value of the sedan, which is $31,000. Now here's the key part. Add a second line for the loan. So under Category, choose Loan Ford Sedan. Amount, negative $25,000. This reduces the total cash payment down to $6,000, which is what actually left your bank. So what's happening here? The asset is recorded at full value. The loan is recorded as a liability. And your bank only reflects the actual cash paid. Now let's check the chart of accounts. You should now see both the Ford Fusion in fixed asset and the loan set up correctly. Before we start recording loan payments, there's something really important you need to understand. Loans impact both the balance sheet and the profit and loss, or P&L. When you make a loan payment, the principal portion belongs on the balance sheet and not the P&L. Only the interest portion is an expense. If you expense the entire payment, your net income will be understated and your balance sheet will be wrong. So keeping a clean separation between principal and interest gives you a true picture of profitability. You also want to make sure you're capturing every allowable deduction, especially interest paid expense and depreciation expense. I'll cover depreciation in my next video. And overall, keep your balance sheet clean. Make sure you're properly adding assets, disposing of them when needed, and recording accumulated depreciation so nothing falls through the cracks at tax time. Since this is a recurring payment, we'll set up an expense template. So let's go back to QuickBooks. Go to the gear icon, top right. Find recurring transactions and go there. Let's create a new expense. Let's name this Ford Fusion Payment and choose Unscheduled. All right, who did you pay? Colorado Financing. Choose your bank or credit card. Then add 2 lines. First is the loan. That's where you record the principal. And under description, you can remind yourself that it's the principal portion. And for the second line, interest paid, that's an expense. You can remind yourself it's the interest portion. Leave the amounts blank because that will be different each time. And add your purchase documents and amortization schedule here. Let me show you the amortization schedule. I think the amortization schedule is better than relying on monthly statements because it shows the full breakdown up front, principal and interest for every payment. So you're not guessing each month and you're not waiting on statements. It keeps your loan balance accurate and your P&L clean every single time. Now let's save this template. Now it's time to record our monthly payments. And this is where the amortization schedule is key. Let's use our template and I'll pull up the amortization schedule side by side. We'll record February's payment. Principal is $625.27. Interest paid was $145.83. Hit save. Let's do another one. For March 3rd, principal is $628.91 and $142.19 for the interest. Hit save. So you get the idea. Notice how the principal and interest change each time. That's exactly why the amortization schedule is so helpful. Let's review the payments. Now, let's look at the balance sheet. Loan has been reduced from $25,000 to this amount. Now let's check the profit and loss. In the profit and loss, interest expense shows $288.02. I'm going to go ahead and record the rest of the payments off screen. I want to jump ahead so I can show you how to reconcile the loan. Now, quick note, for bank and credit card accounts, you should be reconciling monthly. But for loans, reconciling once a year is typically sufficient, ideally before your tax appointment. Just like that, I recorded all payments for this year. For the reconciliation, use your loan statement. To reconcile, go to the gear icon, find Reconcile. Choose the Ford Fusion loan account. Enter the ending balance and the ending date. Enter them correctly and start reconciling. You want that difference to be 0. If it's not, go back and check your payments, any additional charges or interest. Check the ending balance, check the ending date, and if you're sure there was another payment, try clearing the date filter so you can see all transactions. If you see this magic number, you may finish now. If you're not ready to leave yet, check out the next video I made just for you right here.